Hi, I'm Jacob Reeves, a senior tax manager here in our Newport News office, and we are going to be going over some business provisions of the One Big Beautiful Bill Act here.
Hello, I'm Kevin Forget. I'm a tax manager in the Charleston office of Brown Edwards and Company. We are excited to be going over the business provisions of the One Big Beautiful Bill that was passed July 4th, 2025. As some refer to it as OB3, so we may or may not interchange how we're referring to the bill, but there's a ton of information in here. So Jacob and I are going to get right into it with talking about probably the most important part of the bill and most applicable to almost every business out there, which is depreciation. With the One Big Beautiful Bill, the most important component that was about to go away or was being phased out is bonus depreciation. Bonus has been made permanent at 100%. It was currently supposed to be 40% for 2025, then 20% for 2026, and then nothing. It has now been made permanent at 100% for property placed in service after January 19th. So if you have between January 1st and January 18th, fortunately still at 40% bonus depreciation. So please watch your dates in service there. The other major component that was expanded upon was Section 179. It moved from being able to expense $1.25 million in 2025 all the way to $2.5 million can now be expensed, with phase outs beginning after $4 million is placed in service.
Yep. Now that's over double of an increase, and a lot of my clients weren't even hitting the cap to start with, so I'm not sure we're going to run into many issues except on really large clients in hitting this threshold.
Yeah, I mean you're going to have to really your capital expenditure budget is going to need to be massive, but there are a lot of manufacturing clients, construction entities buying heavy equipment that qualify for Section 179 that will get above 1.25 million. So we will see the impact there. The most important piece of both of these, though, I think, is the 100% for bonus depreciation. It's not subject to income. You can be in a loss position and still take the bonus. You still have the option to elect out of bonus as you did before as well.
Yeah, and I think a lot of times where we're going to run into that 179 limit is when you own a bunch of multiple businesses and you're consolidating across and getting K1s from a lot of these, or you're moving to a new location and you're putting a ton of leasehold improvements into those buildings that you've got that 1 year hit of everything being placed in service.
Yeah, absolutely. It is something to be mindful of the overall limitation when you get to a top tier of either consolidation or at the individual's level. So still be mindful of those, but it is a much larger limit. So should eliminate some hassle for some who are close to that 1.25 million.
Awesome.
One other huge important piece of the bill and will most certainly impact manufacturing is an entirely new code section under 168. So 168K manages and dictates bonus depreciation. Well, we now have 168N, which is a brand new code section that introduces a new type of property called qualified production property. You can receive a 100% deduction on real estate for production property. And you heard me, that's right. Not 39 years on real estate, taking it forever to recap your investment. You get a 100% deduction. Jacob, that's huge for manufacturing clients.
That's unheard of.
Yeah,
To be able to expense a building up front.
yes, an entire building, and it's not a modular building. It can be, but it is a full construction from the ground up, foundation and everything for qualified production property, which is defined as non-residential real property that is an integral part of a qualified production activity. Qualified production activity is manufacturing, production, or refining of a qualified product, most of the time tangible personal property, but it can be other in situations, that is placed in service. There are dates on construction, which must begin after January 20th, 2025, and before the end of 2028, and it final construction or placed in service must be before January 1st of 2031. So there's a lot of time here to get the ball rolling on a construction project. If you've been thinking and contemplating an expansion to your production activities, now's the time to do
Yeah, it's a good thing they didn't make it so we had to start building before the end of the year.
it. Yeah, or I guess before January 20th.
Yeah.
They've really focused on that date, but if you've already begun planning for construction or have been contemplating it, now is the time to do so. There are some exclusions to what kind of property it can be. It cannot be used in office spaces, administrative spaces, lodging spaces. It has to be truly the area that you're going to expense under this section has to truly be in the manufacturing of the production property. One thing to note, and maybe of value to some, is a cost segregation study. If you're doing an entire facility or a brand new location for production activities, some of that is going to be office space, administrative area. A cost segregation can help define those areas so that you're expensing only the production.